Good morning, everyone, and welcome to the latest Paradigm Virtual Mortgage Workshop. And today it's all about buy-to-let. So we're going to be covering all angles of it with Fleet, Accord, Keystone and Zephyr. As usual, I'm joined by Christine Newell. Good morning, Christine.
Good morning, John. Good morning, everyone, and good morning to the buy-to-let world.
As you can see, Christine's taken the happy pills again this morning, which is always a bonus. And she's going to need those for later on as we cover her session, which is going to be looking at fraud, which I know is something we've covered in the past, but it's always good to get a refresher and actually see what's changed in the intervening period. But before we get there, we've got a busy schedule ahead of us. We're going to be kicking off with Zephyr Home Loans, followed by Fleet, Keystone, and then Accord. So really busy sessions today. And as I said, it's all about buy-to-let. Buy-to-let market, I think, has held up really well throughout the pandemic. And, at Paradigm, we saw our buy-to-let business increase in 2020, which obviously suggests that our members have increased their activity in that market. And I think over the next few years, the buy-to-let market is going to hold up really well because the basic supply and demand comes into play where we don't build enough new houses. We're not building definitely enough new social housing. So the private rental sector will step in and fill that void. And therefore, professional landlords are going to play an important part in being part of the housing solution in the United Kingdom. So it's always worthwhile seeing what changes are in the market. And today we kick off with Zephyr, and we've got Andy Rao from Zephyr. They're fairly new into the market, specialist in the market space, and they're going to look at complex buy-to-let, their broad criteria, and how they can support you in the market. So good morning, Andy.
Morning, John. How are you?
Good to see you again. Welcome back.
Thank you.
For a change, we thought we'd get you kicking off the
Yes, fantastic. Thank you. Yeah,
the easy thing is just go alphabetical, and you're always going to be last. But we thought we'd turn it around this time and give you a chance to get one in there early. Brilliant.
Thank you for that.
Right.
All good over at Paradigm, I trust?
Yes, yeah, we're all keeping well, touch wood, keeping safe and COVID-free, which is good. So, just looking forward to hopefully in the not too distant future being able to get out and be great to hold workshops out in the real world again. But
indeed, yeah.
Be a bit patient for a bit while longer.
Yeah, hopefully later on in the year we'll be seeing that. So,
yes.
Shall I kick off then, John? Happy for me to go?
Yes, please. I shall disappear and leave the audience in your more than capable hands.
Brilliant. Thank you very much. So, good morning, everybody, and thanks again to the guys over at Paradigm for inviting us along today to talk to you about Zephyr Home Loans and about all things buy-to-let. As you know, my name's Andy. I'm one of the BDMs. We have 3 BDMs covering the UK, myself, Mark, Rookyard covering the south, and Elliot Newey up in the north. And some really good news, we've just appointed some new telephone BDMs as well, supporting us, although we're all, of course, telephone-based at the moment. But we've got some telephone BDMs supporting us as well, which is really, really good. So plenty of people to talk to at the team. And in addition to that, we've brought on some new underwriters. So we've had a lot of activity over the Christmas period in terms of getting us really ready for a busy and prosperous 2021. And I want to walk today through some of the things that we're offering and take a look at where we're at. Just, excuse me, just quickly before we start, just to give you a flavour of Zephyr and who we are and where we've come from, because I'm aware that some of you listening in today might not have used us or come across us before. So we're part of a much bigger group of businesses owned by Computershare, globally a massive company employing over 12,000 people. We look after quite a lot of mortgage lending in the UK. We've got a 41 billion back book. So we've got a lot of mortgages under management, and we've had a lot of experience of dealing with mortgages over the years. We also run, for those of you who don't know, the deposit protection scheme, which I'm sure you've come across in your dealings with landlords. We've currently got 1.8 million tenant deposits under management. It's a really interesting part of our business, and we're seeing a lot of activity in terms of people migrating out of city centres into more rural and urban areas with the pandemic. So it's a really interesting piece of our business that helps us keep an eye on the market. But in terms of Zephyr, we came to the market in beginning of 2018, so we're still relatively new, but we're working in the specialist space, and we're keen to build our book and work with brokers. And we've got a lot of specialisms, including multi-unit freehold blocks and SPVs, HMOs, that kind of stuff. And I'll get into a little bit more detail as we walk through the slides. So then, kicking off, just want to start by running through a few of our sort of key selling points, if you like. So the first thing to talk about is our background portfolio stress test, a question that I get asked quite a bit about, and one where I think we win quite a few prizes. So basically all we're looking for on a client's backbook, guys, is that their rental income covers their mortgage payments at 100%. So provided we've got that, that is our stress test done. So pretty easy stress test. Income wise, we break income down into 4 sections: employed, self-employed, not related to property, so a dentist or an accountant, and investment income such as pension. If your client has one of these 3 kinds of income, then we have a no minimum income requirement. If their income is solely derived from landlording, then we are looking for them to be achieving basically 25 grand gross. So that's basically all their rental incomes added together times by 12. If you hit 25k, then we're good to go. We also offer income top-ups for people that have rental shortfalls, and I'll get into a little bit more detail on that as we walk through the slides. Up to 95 at the end of the mortgage term, so 89 and 364 days that when the loan goes live, because we've got a minimum term of 5 years, and 21 coming in. And gifted deposits. I know we're jumping around a bit, and I'll get into more details as we go through, but I just wanted to give you some of the highlights today. But yeah, gifted deposits, gifted equity as well. We'll take gifts from other companies. So if a customer's got another company and that's lending money to an SPV, we will allow that. So we've got quite a bit of flexibility in terms of around the deposits and gifts. A few other points: HMOs and multi-unit freehold blocks. We're going to get into some detail there, along with SPV lending. We've got large loans up to 1.5 million. Minor adverse we'll look at, and always happy to discuss that if you want to give myself or one of my colleagues a call. Ex-local authority and deck access we'll consider. No height restriction on block. We do want ex-local authority properties to have a minimum private ownership of 50%. And we'll also look at flats above commercial. But again, I'm going to get into that in a little bit more detail as we go through. So moving on, let's get into the first topic, SPVs. So SPVs, massive part of our business, and certainly over the last 12, 18 months, we've seen the growth in SPV applications grow drastically, really. From our point of view, we'll allow up to 4 applicants to make an application to us. We only want directors on the application, guys. So if there are and other shareholders in the business, they don't need to go on the application. So a good example of that would be, for instance, if you had a mum and dad, son, daughter type arrangement where mum and dad were the directors and son and daughter were shareholders. Mum and dad would go on the application and son and daughter would sit in the background. We wouldn't look into them. We wouldn't need any details on them, and they wouldn't be on the application. What we do need, though, is that the directors must own a minimum 60% of the business together, okay? And any individual shareholders in the background that are not coming on the application cannot own more than 20%. So that's a key piece of criteria for us. We will expect to get personal guarantees from the applicants, of course, and they would be expected to take independent legal advice on that. We only lend to SPVs, guys, so we don't consider trading limited companies, and we're looking for the SIC codes on the slides there, so just make sure that you've got that when you're looking at an application. But we will allow people to transfer properties into an SPV, so we're obviously seeing a lot of that. In fact, I've been dealing with a portfolio this morning where clients got a fair number of properties and they're transferring them all across to an SPV. So we'll allow a full transaction in, arm's length transaction, so we'd expect to see any stamp duty paid or capital gains tax, if any, fell due. But we will, and a conversation I'm having a great deal is partnership incorporations. We will allow an S162 transfer. So someone's taking the property out of their own name, putting it into an LLP, and then transferring it on into an SPV. We will look at that as well. if any of you have got any of those kind of applications or you want more detail on that, by all means, drop a note in for a question this morning or give me a call separately. My contact details will be at the end and I can talk that through with you. So an SPV is a very big part of our business and always happy to talk through those. Specialist properties. So for us, we break our specialist properties into HMOs, multi-unit freehold blocks, and flats above commercial. And I just want to talk a little bit about each one. So HMOs, we will go up to 6 bedrooms, guys. As far as licensing is concerned, obviously, if it's a 5-bed or higher, it will have a compulsory license. If it's less than 5, then it's down to the local authority. What we're looking for is if the local authority expect to see a license in place, then we would expect to see that license in place. And if there are any requirements of that license, for instance, a communal area, then we would want to see that as part of the application. We'd want to see that in the property. And we would get that confirmed by our valuation partner, which is Connells. We will allow locks on doors, no locks on doors, bathrooms in rooms, 1 bathroom. We will allow multiple kitchens, especially if the license is asking for it specifically. Had a case just before Christmas where it was a 5-bed HMO. There were 4 rooms on the first 2 floors, ground floor and first floor, sharing a bathroom and a kitchen. And then the top floor was almost a self-contained flat in as much as it had its own kitchen and bathroom. But it was on a license and we considered that as a property that was acceptable and we did a mortgage on that. So we've got a bit of flexibility there, guys. We'll take professional tenants, we'll take DSS. So, you know, a lot of flexibility, single AST, joint AST. And just one point for us, guys, if you've got a property that's 4 bedrooms or less, but it's got people from 2 or more families, 3 or more sharers and 2 or more families, so its definition is an HMO. But if it's 4 bedrooms or less and it's on an unlicensed property, okay, and that's confirmed by the valuer and they are on a single AST, you can actually apply on our standard range rather than our multi-unit freehold block range. So the client will get a lower rate, lower valuation fee. The only thing there is that we work on a lower ICR, but we also work on AST rental. So just bear that in mind, but always happy to discuss that to get a better deal for the client. Multi-unit freehold blocks, again, up to 6 on 1 title. We want the whole block. So if there's been any carve off, for instance, if the landlord has taken one of the properties and put it on a long lease and sold it off, then we won't be able to consider that. We want to get the whole block. The other thing with multi-units that I often see is that we do want the units to have their own lockable entrances and to have their own separate services, okay? But we'll go up to 6 and always happy to discuss that. What we won't allow in a multi-unit freehold block if there's an element of commercial within it. So for instance, 5 flats above a shop and it's all on 1 title, we wouldn't be able to do that. So it's got to be residential only. And then finally, on the specialist side of our property proposition, flats above commercial. So I think flats are a massive area in the business and something that I could probably talk all day about. With us, flats above commercial, what's the key thing to look for? Because I know that the comment that you guys hate the most is down to valuers' comments. And of course, from all of our perspective as lenders, we're always guided by the valuer on what is acceptable and what isn't. But to give you guys a guideline, if it's a new build, then we have no restriction on the type of commercial underneath. Basically, the guidance from our valuer is that the way new builds are put together, that they don't have a problem with them. Where we potentially have an issue is if it's your kind of standard London high street, where you've got a kebab shop, a betting shop, you know, a pub, that kind of thing. So what's the guidance? The simple guidance from me, guys, is if your client can stand in that property and smell any of the commercials below, or it's affected by noise from the commercials below, that's probably going to have an adverse effect on the valuation that comes back from our valuation partner. And that's the key thing, really. If it's subject to noise or smell pollution, then the chances are it's going to return a nil value. So that's the best guidance I can give on flats above commercial, really. The other thing that is often looked at with not in the best of lights from a valuer's perspective is where you have properties with rear access. So maybe you've got a row of flats above a row of commercial and their access from behind the building. And sometimes you get these big sort of blue commercial waste bins at the back. That's another area where valuers take a dim view and tend to return a not favourable valuation. So that's something else just to be thinking about. Excuse me. In terms of flats generally, as I said earlier, we do all types of flats. We'll do XLA, we'll do normal flats. We've got no height restriction on blocks. If it's above 10, we just want to have a bit of a nosy at it before you put it in, just to make sure that everything's okay, but we have no height restriction. We are looking anything, of course, above 4 floors to be serviced by lift. We want 70 years on the lease at the end of the term, but we will allow lease extension as part of the application process, provided that lease extension happens on or before completion. So quite a lot of flexibility there, and always worth talking to us about flats. In terms of local authority, if you do have a local authority flat, as I mentioned earlier, we do want 50% of the block to be in private ownership. One of the really good tools online that I found and a lot of my brokers use is a website called streetcheck.co.uk, quite good for sort of garnering information on the split of ownership between local authority, private owned, etc., which give you a bit of a steer. But of course, ultimately, we'll get feedback from our valuer when they go out to look at the property. Okay, whistling through. So portfolio lending, and we're covering a lot of ground here, guys, do realise, but I just want to give you a really good flavour of what we do today. So portfolio is a big piece of what we do. We do deal with a lot of big portfolios that come through to us. And one of the things that I'm keen to do, and certainly my colleagues Mark and Elliot, is to work on a portfolio with you to give you a steer on what properties are within that portfolio. We think about things like, is there any flying freehold element that you might need to consider? Is there any local, are there any commercial premises nearby that we might want to consider? So we'll spend time working through that portfolio, working out whether there's any capital raising element that could be done with any of the portfolio. And we'll take time working through that and working out stress tests, etc. So always good to get a spreadsheet over to us to work through with you, and then we can give you a steer as to what properties are going to be good to come to us. We'll lend up to 5 million to any unique borrower, but we're up to 7.5 million with a mix of borrowers. So for instance, if you have a husband and wife team, husband could borrow 5 million from us, wife could borrow 5 million from us, and then jointly they could come to us and borrow another 2.5 million together. So we've got quite an appetite to lend there. As far as SPVs are concerned, we could potentially lend 5 million to each SPV. Clearly, we're not going to lend 30, 40 million to one applicant, but we've got an appetite to look at that and understand what they've got and where we can help them expand their lending with us. In terms of portfolio lending, generally, if you go over 2 million with us, then our standard product range goes up to 75% loan to value. But if you go over 2 million, then anything above 2 million, we cap at 70%, just so you know that when you're working on a portfolio. And some really good news, guys, that I will share with you today is we are having a rate change tomorrow. So really exciting. We're changing our LTV banding. So currently we're 60%, 70% and 75. We're moving to 65, 70 and 75. So an uplift in one of our LTV bands. We're expanding our product range as well. We're adding another fee product to our range. So we're going to have a 0 fee option, a 1% fee option, and a 1.5% fee option. And to top it all off, to make it really good, we are reducing our rates as well. So hot off the press, tomorrow morning, we're going to be putting some comms out, and you will see on our website that we'll have our new rate guide. So keep an eye out for that, because some really exciting new rates coming out. Just getting back to portfolio lending then. So as I said, unlimited background portfolio, and our stress test is the rental income must cover the mortgage payments at 100%. The documents that we're looking for are a business plan, which is on our website, cash flow forecast, which is on our website. 2 really easy documents to fill in, guys. We've kind of made them almost a tick box exercise in terms of how they work. A couple of questions on there to answer, but they're pretty straightforward, but always happy to help you with those. We use eTech as our submission platform. So we need to do a background check on the client's portfolio. So for those of you that have not used eTech or CoreLogic, it's now been renamed, I think. There's a link on our website through the submitting business link, and you can go on there. You can register for CoreLogic. You can then register with the lenders that are on CoreLogic, and there's quite a few of us lenders that use it. And once you're registered, you can upload the client's portfolio, and it will do a background AVM on the values of the property, the rentals, etc., etc. So a really useful tool for us, and actually a really useful tool for you if you're doing multiple applications to different lenders. And then finally for us, we want a portfolio overview spreadsheet, again, on our website. And it's there just basically to tell us what properties are coming to us so we can help you work through, especially if there's going to be any top slicing or anything like that to consider. Okay. Moving on. So top slicing, let's just talk about that very, very quickly. So we have two types of top slicing, guys. We have income back top slicing, and we have portfolio back, or cross subsidization, as we like to call it. So with income back top slicing, what we're looking for here is that one of your applicants earns a minimum of 50k. Okay, it's a really simple proposition for us. So provided one of your applicants earns 50k, then we're good to go. The way that it works is if you've got a property that's yielding, let's say, £1,000 a month in rental, but you need 1,100 quid to get the mortgage loan that you need, then you're obviously 100 quid short. We annualize that, so that's £1,200. Then what we do is we do an I&E on the client earning the 50k. Provided they've got £1,200 or more left out of their rental income, they can use that money to top up. It's as simple as that. Same with cross-subsidisation. We look at properties that are coming to Zephyr. So if you're bringing 5 properties to us, one of them has a shortfall, then we could potentially look at other properties that are coming over that have got excess rent to cover that shortfall. There's a few more things to consider. I won't get into all the technicality and detail here, but of course, give me a call. Happy to talk it through and work it through with you and help you put that together. But the underwriters as well will come back to you and let you know if there's a shortfall, especially if you get a down val or whatever, if there's anything we can do to support lifting that loan size back up again. In terms of offers are valid for 3 months, just so you know that as well. And obviously busy times at the moment trying to get things through. So it's clearly a difficult time for everyone leading up to the stamp duty deadline, and we've all been under pressure, which is one of the reasons we brought in the new underwriters. We brought 5 new underwriters on, as I said earlier. So really good time for us trying to keep on top of the workload. So we're kind of geared up, ready to go for 2021 and ready to support you guys. So if you've got any questions or you've got any cases, by all means, give me a call. My number's there, or drop me an email. Always happy to talk, and I've put the new business team number there as well. So if you can't get hold of me, you can get a hold of one of those guys and run through your case, and they will help you out. So guys, whistle stop tour. I hope that touched on some of the things that we do and you found that interesting, but shout if you need anything from Zephyr Home Loans, and we'd love to deal with you and help you out.
Andy Rowe, go.
Oh, get it, squeeze it in, Christine, get it in.
Fantastic. And an exclusive for Paradigm. Brilliant rate change and 65, 70 and 75% deals coming out tomorrow. Fantastic news. I'd also mention very quickly, I would call it the sniff test. The sniff test. If you can smell deep frying, that means you've had your chips for that property.
Absolutely, so Christine, couldn't agree more.
The sniff test. Okay, fantastic. We've got loads of questions rushing in here, Andy. Fantastic engagement here. What if, for instance, mum and dad are directors owning 75% of an SPV and son is a shareholding owner owning 25%? How should the application be structured, or will it not work? And that's from Paul Skinner. Good morning, Paul.
Morning, Paul, and thank you. It's a great question, Paul. That wouldn't work for us, unfortunately. So 2 ways that we would want to structure that. Either A, it can't come to us as structured, or B, we could change the shareholding. So mum and dad become 80% shareholders, moving son back to 20, and then mum and dad are the applicants. Or C, turn son into, if he's old enough, of course, turn son into a director. He would have to be 21 for us, and then all 3 go on the application. So that's how we would look to work that one.
Fantastic. Okay. And John, good morning, John. Minimum age for directors on limited company mortgages?
20. Good question, John. 21. So minimum age for an applicant for us is 21.
21. Fantastic. And Liz, good morning, Liz. Do applicants have to be owner occupiers?
Oh, great question. No, you didn't miss it. I didn't say. I can put that on my next slide deck. No, they don't. What we're looking for. So if it's a standard property, i.e. a terraced house or a semi-detached, they just have to be property owners. So they could have owned a buy-to-let property for 12 months, or maybe they own a property that mum and dad live in Wales, but they live in London because they work in London in a flat and they rent that. As long as they've owned a property for 12 months, they meet our criteria. If it's an HMO or a multi-unit freehold block, they have to have owned a buy-to-let property for 12 months.
Ah, fantastic. Good stuff, Andy. Thanks. Mike, good morning, Mr. Hoare. For the HMO licence on buy-to-lets where required, will you accept evidence applied for during application process, or do you expect licences in place on completion?
Good question. Morning, Mike. Morning. Really good question. So if it's a remortgage, obviously we want to see a licence in place, or that they've applied for a renewal. And provided they've applied for renewal and we've had acknowledgement from the local authority that it's been received, we're good to go. If it's a purchase, if it's an existing HMO, okay, we want to see the vendor's licence and, again, evidence that they've applied for the licence from the local authority and they've received that application. If it's a new HMO, so they're converting a property from a standard property to an HMO, Not for us until that license is in place, simply because we have no knowledge of whether that license is going to be granted. So tricky one for us. So we always advise the applicant to get the license in place before they bring that property to us.
Fantastic, thanks for that. Vaz has got a fantastic question. I'm just about to post it. Oh, it's the freehold leasehold question. What about the ownership here? Right. I'm having a lot of this at the moment, Andy. A lot of lenders changing their attitude on this. What's your take?
I think we've been waving the flag on this, Christine, for some time, because we're quite picky on this, and this is due to our knowledge of backbook lending. We've got the old Mortgage Express backbook and UCAR, etc. So we know a lot about this. So for us, if there is an unusual relationship between the freeholder and the leaseholder, so let's say you've got a leaseholder that there's 4 flats in the block, they own 1, but they own more than 25% of the freehold. Okay, that's an unusual relationship for us. We would want a charge on the freehold. Or if a relation to the leaseholder owns the freehold, we would want a charge on the freehold. But here's the difficulty, and it's kind of contradiction to what I just said. We need the leaseholder and the freeholder to be the same legal entity. So I know a lot of lenders want a difference here. So the leasehold may be in the applicant's name and then the freehold in an SPV or a limited company, for instance. We actually want the two to be the same, and then we want to take a charge on the freehold. So that's our position.
Yeah, this is all about possession, isn't it? Taking that back into possession, and if they're not the same entity, it can cause some issues.
Yeah, and the other potential. Sorry.
No, go on.
I was going to say, sorry, Christine, to cut you off there. I thought you finished. Apologies. I think the other issue there is that when there's a relationship between leaseholder and freeholder, the leaseholder can aggravate the lender's charge by not paying ground rent to the freeholder. Then the freeholder zooms ahead of the lender in terms of creating a charge or a hold over the property. So it really aggravates the relationship for the lender in terms of being able to take the property into possession. So it's a really difficult area, which is why more and more lenders are looking at it.
Yes, okay. Now, there's a couple of questions that I'm going to have to, because we're going to have to cut it short. There's loads of questions coming in, Andy, really good engagement. But a couple of ones I'm going to say, Mike is asking, can we go use you direct? Of course you can, Mike. You don't have to go through packages for Zephyr. They're on our panel and you can use them direct. And absolutely. Helen has asked about UK residency requirements. Very apt at the moment because obviously Brexit and everything else is going on. What's your view on that one? So
must be a UK resident or have indefinite leave to remain, Helen. That's our position.
Okay, well, that's quickly asked. Now, Malcolm's got some questions. Mark Evans has also put some questions in there. And Scott Lewington has asked some questions. Could you answer them in the chat for us, Andy? Because we're going to have to move on.
Yeah, I absolutely can. And thanks, guys, for hosting us this morning. And I'll get to those now.
Thank you so much.
Thanks, guys.
Thank you, Andy. Thanks, Christine. Loads of questions coming out there today, which is really good news. And again, I think it shows just how valuable this sector of the market is to the mortgage broking community. So let's move on to our second buy-to-let specialist today. And it's great to welcome back Josh Parker from Fleet Mortgages. Good morning, Josh.
Morning, John. Thanks for the invite.
Yeah, you're more than welcome. Good to see you again. And it's good to see how well Fleet are doing as well in the market. Had a catch up with Steve Cox yesterday, and things are looking pretty rosy in the Fleet garden at the moment.
Exactly. Yeah, very, very busy, very good. A lot of it's service for us as well. So as I go for the presentation, I'll talk more about it through. So yeah, great.
Yeah. Well, on that note, then I'll disappear, and the next 20 minutes are all yours.
Thank you very much, John. Thank you, guys. Well, first of all, thank you to the Paradigm team for having us in today. Really appreciate it. And massively a big thank you to you guys for tuning in. I'm speaking to you daily, and you work from home, homeschooling. Times are hard at the moment, so appreciate 20 minutes of your time is really appreciated. So just to go through our presentation today, we're going to look at the buy-to-let market, current with COVID, what's happened, how we've adapted, how the lenders have adapted. We're also going to go through just and illustrate how important it is for a mortgage broker and so for clients to have access to you in the specialist markets, because these are not straightforward cases that come our way. So just how pivotal and how we need you in the market. And we'll also demonstrate how fleet mortgages can assist you with your clients. So there's quite a bit of criteria that crossovers with Zephyr as well. So I'll touch upon that as I go through. So 2021, yes, what a year. Let's go to 2020 first, lockdown. I'm a half glass full kind of guy. I'll brush on 2020 because it's been a very tough year. I think lockdown's been tough on me, as it has for everyone. I think the positive thing is, my friends and family are safe and well. I'm safe and well. It is tough being locked down, but we're in it for a purpose. And I think the good thing is we've all adapted really well to this, us, you, other lenders, clients. I mean, if you look at today's meeting, this time last year, I wasn't familiar with Zoom or Teams. We've all adapted and we've done really well to adapt. So, we've done really well to get there. But how's things changed? I mean, if you look at me, if you can see in the background, I've got a lovely kitchen. I've tried to lock him up the back as well, but I've got a cat banging the door down as well. So apologize if you can hear him. But yeah, my job role's completely changed. 5 days on the road, 2 days in hotels. I'm 5 days a week in the kitchen now, and it's probably a similar stance for you as well. It has all changed. But again, we've adapted. And with Fleet, we're very black and white of what we can and can't do. And this time last year, I was getting a lot of inquiries come through, and it was basically around valuations. Fleet, Josh, why can't you do AVMs or desktop valuations? There'll be other lenders on this call that are third-party funded also, so I'll touch upon why we couldn't. Fleet are third-party funded. And in the background, part of the third-party funding is what will happen is we'll lend funds, we'll build up a mortgage book, and that mortgage book then needs to securitize and sell. In order for that mortgage book to sell, we need a credit rating. And for that credit rating, you have to have a full valuation report done. That's our agreement with the funders. So the first lockdown, unfortunately, we couldn't do valuations. If we could, we would have, but we couldn't. And luckily, with lockdown 2, valuers have still been able to go to properties, so we've still continued to lend. So that's us. That's why we couldn't do AVMs and desktop valuations last year. I mean, LTVs reduced, there was uncertainty, but as I said, we move on. So we're all working from home. Landlord purchases are a record high due to the stamp duty relief. And there's plenty of funding. I see on the news, on LinkedIn, lenders are constantly moving and evolving. High LTVs are coming back. Tweaks to criteria that are helping more and more customers. So lenders are moving with the times and they're doing all they can. But the key thing for Fleet is great service. And some of you on this call will or won't have used us. Hopefully you will in the future. Genuinely, we've got a great service, a really good service. We're 24 hours currently on everything. That's dips, apps, valuations. Any document you send in to us, we'll come back to you in 24 hours. Again, even at the height of the pandemic, we were at home, we were 72, I think we might have crept to about 96 hours in SLAs. And I think it's just a testament to our operations team, our underwriters, our IT team. We've managed to get through the pandemic and kept our service. And that's why we do get a lot of business. And a few months back, we had the best month ever on applications. And, we're not a rate-driven lender. We're not a fee-driven lender. A lot of that is simply down to service. So moving on, 2021. I said I'm a half glass full kind of guy. 2021, we've got a lot of opportunities. House prices are set to rise. They have. The stamp duty tax relief holiday is coming to an end. Will it be extended? I personally hope so. Obviously, that's a topic to come up later. But, purchase business will slow down. It will. But there's so many opportunities out there. I mean, if you cast your minds back to 2016, when the government brought in the stamp duty increase, landlords bought and bought and bought, and they bought at a rate of knots. Fleet have done some research, and a lot of our book, back when clients bought in 2016, are actually on 5-year deals. So granted, purchase price or purchases will slow down. However, there's massive demand. There's going to be lots of remortgages coming up for renewal. And some of these lenders won't have product transfers or retention products, or the product transfers might not be as competitive or start on the market. So it's a key time for you guys to get involved. And like I said, I do think we're going to see a massive surge of remortgage in the buy-to-let space. With that in mind, buy-to-let products on the market continue to increase. Rates are at an all-time low. Like I said, we've had record months. I'm assuming it's the same for other lenders. So hopefully it continues. But at the end of the day, tenancy demand always increases, and it will continue. People need somewhere to live. So the need for advice. We are in difficult times. And the question is, how many of your clients' circumstances have changed due to COVID-19? Some, many, all. I mean, if you look at the terminology and the words that, you know, these are like day-to-day conversations I'm having where furlough, bounce back loan, payment holidays, self-employed grants. You know, this time last year, these were unknown to us, and clients have taken these schemes, but how does it affect the chances of getting a mortgage? This is where you come in. Clients need the professional help. So I think more than ever, clients need to be getting in touch with you to get advice for these sort of mortgages. So the question is, who are fleet mortgages? What can we do? How can we help with these more complex cases? We're a very experienced team. We cover a broad range of products, standard buy-to-let, limited company, HMOs, multiple unit blocks. We've got a very broad criteria. And the first bit for us, very similar to Zephyr, is portfolio landlords. How can we help with the portfolio landlords? The first part of a fleet is 2-year deals for higher rate taxpayers. How can we help? If you've got a client on a 2-year deal, on a 2-year fix, and if they're a higher rate taxpayer, you're going to be looking at rental stresses of 145 at 5.5. If we look at some maths, £1,500 rent, that'll get your client a loan of around about 225,000, give or take. Fleet, with a 2-year deal, even for a higher rate taxpayer, we've got rental stresses of 125 at 5.5. Well, that means on that £15,000 rent, 261,000 loan. That means this client coming to Fleet can actually raise an additional £36,000 on this 2-year deal. We've got 5-year pay rates like every other lender. However, a 2-year deal for a higher rate taxpayer can fit perfectly. So just give us a call. If you're looking at paperwork to complete, you know, we can be the path of least resistance. We only need an assets and liabilities form. That could be your client can have a spreadsheet, or you can have your own spreadsheet with that portfolio. If you send that in to us, we're not a picky lender. We're not going to say, look, can you transfer this onto the fleet headed paper? You send us in that that spreadsheet, which has all the information we need. That's the portfolio underwritten. We don't stress on the portfolio. You know, we've got a client with over 400 properties in the background currently, and they've come to us. We can lend, and like I said, we don't stress on the portfolio. So how highly is the portfolio geared? We just need to see the properties are self-funding, and we can actually help with that. You genuinely will get access to experienced underwriters. I know you'll have people sitting in front of you today and say, yes, you can speak to your underwriter. The people that have used us, genuinely, you can speak to the underwriter. And we are seeing a big tranche of portfolio landlords. And as I said earlier, service. Why is service so good? 24 hours. 2 things that we can do with our system. You can actually copy across your DIP, first of all. So you haven't got to go through, type in each individual DIP. You can imagine for 20 properties, very time consuming. The second part is the documents in the backgrounds. You know, have you got to upload documents to each individual case? We'll actually copy across the documents for you. So we're a portfolio landlord. You will have, we're a portfolio lender. You will have to apply for individual mortgages each time. However, you can copy the DIP, and we can also copy across the documents for you. So it makes the admin and everything from your side a much slicker operation, and that can work really well. And we recently increased our exposure as well. So we get a lot of these portfolio landlords come to us, and we used to cap at £2 million. We've actually increased that to £5 million. I cover South Wales and the Southwest, and I never thought I'd see the day, but we've got a client that's actually gone above the 5 million limit recently, which we've obviously had to cap. So we are seeing this business. So if you've got a client that's looking to move their portfolio across to another lender, it might be worth giving us a call. And day one remortgages. We're seeing a lot of day one remortgages. How can we help? So the first part, I'll give you an example or a case in point. Client buys at auction via cash or bridge, either scenario. They spend £100,000. They needed a quick completion. They need basically to get a lender that will remortgage straight away. We can do that. That's one. That's bread and butter for Fleet. Case in point 2 is, what about the client that's done renovations to the property? They've done significant works. How can we help? Perfect for Fleet. We'll give you the same case in point. £100,000 bought at auction. £30,000 spent on renovating the property. The property had a new kitchen, a new bathroom, you know, new carpet, new lick of paint. You know, what we can do is, if it's £100,000, £30,000, most lenders will say we'll only lend on what they've spent. With this case, you've got to justify the increase in value to the underwriter. So what I mean by that is, we'll actually lend on the higher value day one. So that property might actually be worth £150,000. They've purchased the property, the works have been done in 6 weeks, we can lend on the higher value. A little top tip, try and get photos before and afterwards. That's key for the underwriting team. And point 2 is invoices and receipts. We want all the invoices and receipts to justify the increase in works. I've had the great clients or the great cases even that have come through where they bought for £100,000. They want to remortgage 2 weeks later. They've put a lick of paint on the wall. It's now worth £400,000. You know, it doesn't happen. But the realistic cases where they've done significant works, you know, they've got a bridge or they've got cash, they've put money in, and they want to take money back out, it works perfectly for fleet. And we'll even go one step further. Your client might have an onward purchase, or they might want to take funds out for a auction in the future. We don't have a same day completion with a purchase. We don't need to know the onward purchase. Effectively, there's your money, Mr. and Mrs. Client. We're very comfortable with that. As long as the client's not capital raising for any, well, it's gambling debts or tax bills. So there's the slide. So I haven't had one yet, so don't be the first broker to give it to me, but don't say my client's off to Vegas to put her on black. I'll say, okay. But joking aside, underwriting will decline the case. So, you know, any legal loan purpose, as long as it's not paying off a tax bill or a gambling debt, we can capital raise for any legal loan purpose and business purposes. HMOs is quite a key part of our business as well. We do value it on a room by room basis, up to 6 bedrooms, up to 75% loan to value. You know, we've got a minimum criteria, but like I said, 6 bedrooms is our maximum. And we get quite a lot of HMO business. And this is where fleet can come into their own. MUBs, multiple unit blocks. A multiple unit block is effectively flats on the same title, on the same freehold title. They haven't got their own leasehold titles. You know, a lot of lenders will lend on MUBs. However, they will have a certain or a minimum unit size or value. So if you look at that picture to the left, the top 2 flats might be small studios or small 1-bedroom flats. They might be worth 90,000 each and might be 33 square meters in size. Our criteria is value as comments. So what we can do is we'll say, actually, value as comments, we'll lend on the whole block. However, if they are very, very small studios or 1-bedroom flats, refer them on to me beforehand. Because what we can do is, if we think it's got legs, we'll say to dip the case to make sure the case passes on the dip. We can then refer the case across to the valuer. The reason I say this is because we don't do a commercial valuation. Our valuation is bricks and mortar, and we have to get rental comparables. So if we've got a small studio flat there in the top that's, I don't know, 25 square meters, and there's no other similar comparables in the area, the valuer will return a nil valuation figure. So what I'd suggest is if you do have these sorts of cases, refer them across to me, refer them across to your BDM. We'll actually be happy to refer that onto the valuer for you. So we pick up a lot of business from that as well for you. And quite interestingly, that was a good presentation there from Zephyr. Shared accommodation. We also do this, and it's a bit of a cheesy line. I've said it on a lot of presentations, and do you know what? It works, because I see the cases come in and they'll say, Josh, I've got a mini-mo. So the term is mini-mo, and you're going to look at me and think, well, you know, what is a mini-mo? I'll give you a property in South Wales, and I'll give you a case in point. We've got a 4-bedroom house. It's got a reception room. It's worth £300,000 in today's market. It's currently let to a family for £1,000 a month. Bit of a ruthless landlord. I want to increase my yield. I need more rent coming in. What can I do? I want to make it into a HMO. At the end of the tenancy, the family leave. I apply for a HMO license by the council. The time frames, the costs, you know, amending the property, fireproofing the property. Right, I don't want a HMO. It's a bit too far away from what I want. I want something that sits halfway house. So a mini-mill. So basically what we've got to look at is, first of all, is your local council. Do you need a HMO license in that area? And that's the first question. If it doesn't, the second question we'll ask is, has the property been changed? Is there kitchenettes, bathrooms, or would the family still sell as a family house today? If that's a tick, we can actually consider up to 4 sharers with locks on doors, multiple ASTs, and we'll actually do that on our standard products. What that means for you and your clients, lower rates, lower fees. You'll also get a free valuation up to £500,000. On our HMO range, you wouldn't. So when you're sourcing us, have a think. You've got this small HMO. If you're sourcing for HMOs, give us a call. We might be able to consider it on our standard terms. Even though it's going on a standard valuation, we'll still value it on a room by room basis. So this client, they're renting out 4 rooms, £500 a month. That's £2,000 a month in rent. And that's on a standard product. And it works really well. And go back to our rental stresses, 125 at 5.5. It fits really well, even on a 2-year deal. So if you see any of these mini-mos or small HMOs, you know, please do give us a call, because we do get quite a lot of that business. SPVs and limited companies, very similar to Zephyr. 2 things to bear in mind with fleet. We have got a limited company panel of solicitors. We've currently got 11. So if the client wants to go dual representation, they want to use the same solicitor for us and for the client, they have to select a solicitor from that panel. We insist on all shareholders and directors going on the application though. So even if they've got a 5% shareholding, they go on the application, they have to take legal advice, and they have to agree to personal guarantees. That's our rules, unfortunately. If you've got, it's a maximum of 4 shareholders and directors. We can't do more than 5. And very similar to Zephyr, minimum age 21. We can also do intercompany loans and directors loans. We're seeing quite a lot of that. Say we've got Josh Parker Builders as the main limited company, and then we've got Josh Parker Lettings as a subsidiary. As long as that subsidiary is an SPV set up for property holdings, they can actually take a director's loan from that company. There's more questions around, whether they've got the same shareholders and directors in both companies. Ideally, they have. If they haven't, just refer it across to us. We do get quite a lot of that. So directors' loans, intercompany loans, it's a very good, useful tool for us. Ex-local authority houses and flats, valuers' comments, we say, there's your minimum values. The key thing for fleet is we haven't got a minimum to maximum council ownership to private ownership. So granted valuers' comments, but it's quite rare that I see many get declined. So if you've got a case where you've got a block of flats or you've got housing estates, privately owned properties in the area are quite low, might consider us for it because we can actually lend. And one of my favourite slides is deck access. I think a lot of us will be quite familiar with deck access. We lend on deck access. Maximum LTV on ex-council flats and houses is 70%. But what is deck access? I get asked daily. If you're a Bill fan, I'm a massive Bill fan. I used to live watching the Bill in the 90s. Got a guilty pleasure. I still watch it on Watch, but hey, we'll come back to that. PC stamp goes up to the 4th floor. He knocks the door through on his radio. Sarge, I've got the wrong house. There's a lady in a dressing gown. Nips back out, goes next door to the flat next door. That's deck access. Lenders don't like it, or not many do. We're completely comfortable with deck access, so we can help. Just remember, maximum LTV of 70%. I'd also watch out for cladding as well with a lot of these ex-council properties. If the property's got cladding and needs in the SW1 form, currently we can't lend. So just maybe watch out for cladding. But I mean, like I said, very approachable. If you've got a case, just pick up the phone and give us a call. We're more than happy to talk a case through for you. I think this is my last slide. And properties next door. We, again, a very small USP for fleet, but I must get these calls daily where, I don't know, landlord lives next door to client, landlord lives next door to tenant, or they've got buy-to-lets in a row of houses. We can actually lend next door. We've never had a property being knocked through, made a large resi or HMO. Please don't be the first if you've placed a case with us. But joking aside, we can help. So if you get these sorts of cases, please do consider us. So I've also rushed through that. I know I've got 2 minutes left for questions. So I really appreciate you all listening. Thank you very much. Have you got any questions you'd like to ask me?
Yes, Josh. Questions coming in. Fantastic.
Oh dear.
So much for that. I love your analogy of deck access. I used to love the bill. Fantastic.
Christine, I still watch it. I got it on Sky and record. No, it's really bad, but I love it. So anyway, digress.
Do love the bill. Do love the bill. Right. Okay. We've got some questions coming in. Let's start. Vaz, regarding the earlier question, I was going to ask this, Vaz, but I'm glad you put it up again. The leasehold freehold debacle continues. Oh, excuse me. My house phone is ringing. I think that's the bill. I'll put myself on mute.
No problem. I'll ask that. I'll take over. It's also an issue for us, Vaz, and very good question. We will lend. However, we will require a charge on the leasehold flat and also the freehold. The stipulation for us is if you've got a block of, say, 3 or 4 flats, even though we're taking a security charge on the freehold, we will only lend on 1 flat. So it can work quite well with the smaller flats. However, when you're talking 7, 8 flats, there's a freehold leasehold connection. We can lend, but we need a charge on the freehold. And sometimes that can make it restrictive, like future purchases. So we can lend, yes, but we will require a charge over both the leasehold and freehold and lend on 1 flat only.
Thank you for that. And Don has asked, good morning, Don. Josh, is there a minimum square meterage on, I assume that's your studio flat you're talking about?
There is, yeah. So technically, if it's an individual studio flat we're lending on, it needs to be worth 150,000 in a city centre location and needs to be 35 square meters. If we go back to that MUB slide I went through earlier, if we've got one unit that's slightly smaller, we still can refer them. I think we're going to struggle if we're going down to 25 square meters, but anything 25, 30, 35, we'll always review and take a view on. So if you do get a smaller studio as part of the MUB, contact me, contact the advisors. Sorry, I just noticed when you put "you from Wales." I can't control the accent, Adrian. I do apologise. I'm trying because I'm nervous.
Adrian, yes, Josh is from Wales.
But yeah, if you get an MUB, go back to that. We can refer it across to the valuer. So yeah, come back to us.
Okay, fantastic. Sue, good morning, Sue. Do you lend on a block of 5 flats, 2 sold off, and lending required on 2 remaining plus freehold? Ooh.
It's an interesting one. So we sometimes have exceptions. So say, for example, the 5 remaining flats from the same freehold. We used to have exceptions where we could consider them. Currently, we haven't got exceptions. I think if they're on separate leases, it's that same issue again. We'd lend on one, and could we get a charge on the freehold with the other 2 flats being sold off? That might cause us an issue. So probably want to need to discuss with underwriting.
Okay, thanks for that one. What about non-UK residents, Josh? How are you with non-UK residents?
Not very good, unfortunately, Christine. 3 years of residency and full rights to remain like Zephyr, unfortunately. So
Okay,
yeah,
no problem, no problem. Is there any room of manoeuvring or change on that coming? No.
No, unfortunately not. No, not at the moment. That's our lending policy, unfortunately.
Yes, fantastic. Okay. Now, really like to end on a positive here. Ian, look at that. Just use Fleet on a multi-application portfolio, landlord excellent service and straightforward underwriting considering the client circumstances. Thank you for sharing that, Ian. That's fantastic.
I've got to say something. Me and Ian have never met, so I haven't paid Ian or told him to do this. So.
He's your next door neighbour, lives in the deck access next to you.
And we lent, yeah.
Fantastic. And Malcolm Shand is just saying, Josh, you need to get out more. Oh, you can't, can you?
Are we going to end on that?
Yes,
Thanks,
we're going to
Malcolm.
end on that. But, you know, fantastic, Josh, and thanks for coming along and whistle stop through Fleet. Some really good stuff there. Thanks a lot.
Thanks for having me. Thank you.
Josh, yeah, a bit of memory lane for all of us. Unfortunately, I can remember the bill when it was a brand new television programme and there was 4 channels. So, the days of video and catches. But thanks again, really good session. Engaging. So let's move on to our next buy-to-let lender. And again, sticking with the specialist theme, we've got Keystone Property Finance. And today we're joined by Phil Ritchies, Sales and Marketing Director. And I know Phil has he's presented at 1 or 2 of our events in the past. And when he's not talking all things buy-to-let, as you can see on the screens, he does a bit of part-time air traffic control as well for the Kent area. Obviously not too busy at the moment. Good morning, Phil.
Morning, John. Yes, the air traffic controlling is on standby at the moment, waiting for lockdown to finish and people to be able to go on holiday again.
Well, that's good to hear. At the very least, I hope you've got them all in a hold pattern at the moment, circling somewhere off the White Cliffs of Dover. Great to have you here again, Phil. And obviously, you're going to be looking at the specialist buy-to-let area, looking at brokers, landlords with complex cases, and how Keystone can help them.
Yep, absolutely, John. Thank you again. And in terms of it, I'll take over if you're ready to let go of the reins, and
I will disappear and leave the audience.
I'll control the skies, as they say.
I was going to say, I'll leave the audience in the hands of an expert. So see you in about 20 minutes.
Thanks, John. Right. Good morning, ladies and gentlemen. Thank you for joining the Paradigm Show today. And thank you to John and Christine and Laura for setting up what is always a really good opportunity to talk to you, the brokers. Over the next 20 minutes, I want to go through a very quick update in terms of supporting you, the brokers, from what is the new normal to the new future. Keystone has been in the market for over the last 2.5 years. And during COVID last year, I'm delighted to advise that we continuously funded at 75%, even whilst others were reducing the LTVs or unfortunately withdrawing from the market, which is exceptionally good news for you, the brokers, even though during that period of time we had to restrict both valuations, because clearly it's a case of, as Fleet has already advised, that valuations weren't able to be done because the securitization market would not allow AVMs to be carried out on our type of funding. We have issued and published our service levels and turnaround times on our website, which is updated on a regular daily basis. So if you want to know where we are and what we're doing, you can clearly see that from our website, and that will give you a good indication of what we're able to do. We introduced our BDMs available via video conferencing when we went into lockdown from our office on March the 17th last year. Clearly, we've been back into the office on a part-time basis. Unfortunately, at this present moment, the whole office is working remotely, but we're working 100% remotely and at 100% efficiency. So if you want to talk to your BDMs, they are available via video conferencing. One of the things that was brought in during the first part of lockdown was for our BDMs to review your submitted cases. What a BDM always wants to see, and what a broker always wants to see, is if they submit a case and they've discussed it, that the case is likely to be accepted and able to go through to valuation and completion. However, in many cases, either the case has been submitted incorrectly, or information that we weren't aware of is then submitted on the application form. So for every case now submitted, the BDMs review that case thoroughly before it goes forward to both our pre-offer and our underwriting section. This means that you get a fast no if the case can't complete, which in everybody's circumstances, especially today with stamp duty looming in a little over 8 weeks' time, is imperative. We also introduced in July an online chat feature. Now, this has become exceptionally popular. We're doing somewhere in the region of 160 to 200 chats a month with brokers who could be holding for another lender to actually contact another lender on the phone, but wants to also ask the question. They can ask it online. We will answer online. We answer those chat features within about 40 to 50 seconds of it coming up live. In terms of advice for brokers and applicants, well, we're able to give brokers and their applicants advice on how to protect their data. It's all logged on our website. It'll give you a good overview as to what you need to do to protect yours and their data to ensure that none of it goes missing and none of it is misused, which is clearly a problem and is something that is growing considerably in the UK market. We're able to lend to expats, but one of the problems that expats do have is getting certified documents. We now have what we term as an IDU facility, which enables us to get identification of the client, and also we can certify documents via a mobile app, which is utilized now on a regular basis. And as I already started and said at the beginning, all of our staff, that is sales, underwriting, risk, compliance, completions, and our IT section, are working on 100% cloud-based technology. We all work remotely on a consistent and regular basis, 9 to 5, 5 days a week. But one of the great pieces of news that happened at the beginning of 2021, and I would thank any broker that is on that has used Keystone over the last 2.5 years. Keystone completed its first, and it should say first, not FRIST, but I apologize for this spelling mistake, should say a first securitization. We completed our first securitization in January 2021. We had a remarkable response from the market for our lending facility, and our AAA senior notes achieved a rating of SONIA plus 95 bips. And everybody will say, what is SONIA? SONIA is the new response to LIBOR. LIBOR will be dead by the end of 2021. However, two other things that I think are imperative and important to you as brokers. Let's have a look at the buy-to-let market overview. And I've gone back to 2007, and it's always good to go back to where we had a really, what I would term as rampant buy-to-let market, which was 2007. You will see in that year that we were achieving somewhere in the region of £44.6 million worth of completions over that year. You will see during 2009, 2010 and onwards that the market dropped considerably, as many of you will be aware. But look at 2019 and 2020. The 2020 figures have just been released by IMLA, and 2020 we're looking at £38 million in terms of what was completed last year. We're looking at 40 as a projection for 2021 and 41 for 2022. But the orange predictions underneath are those that will be through limited company lending predictions from Keystone. So we predicted 9 billion in 2019 and 15 in 2020, rising up to somewhere in the region of 20 by 2022. Now, that is a prediction. It's not that that's where we think the market will be going. It's where we think it might be going to, given the fact that the landlords are moving very heavily towards limited company buy-to-let lending. But let's look at one other thing, which is buy-to-let mortgage deferrals, a very important part of the market. When they were launched on the 27th of March and moving forward, you will see there were a considerable number of buy-to-let mortgage deferrals, or mortgage payment holidays, as we would call them, were offered. These have substantially reduced significantly to the 20th of November 2020, when the amount of buy-to-let mortgage payment holidays are now almost negligible in relation to the market. All of this information has come from the recent IMLA publication and therefore is completely up to date. But let's have a look at a few key dates and changes for 2021. One, the Accommodation and Protection Bill for dogs and domestic animals. Yes, this is a real bill. Yes, this has gone through Parliament, and yes, it will become law. It will enable tenants to have the ability, especially during lockdown, to have a pet within their property, which has been declined and refused by many landlords. In March, we get the budget and possible CGT revisions and changes. In April, we see stamp duty changes, which we know are coming in. We know the buy-to-let taxation changes finish on the 6th of April 2021. The buy-to-let taxation changes initiated in 2017 will come to fruition. And deadline for electrical compliance. What do I mean by that? That every property rented, whether it be newly rented or now currently rented, must have an up-to-date 5-year electrical certification. In June, there will be a bill going towards Parliament in terms of the right to rent. And last but not least, although I have seen this from the Inland Revenue, the landlords will there will be an implementation of a system to landlords in relation to taxation and payment of taxation via the Inland Revenue. So enough on key dates and changes. Let me introduce you to Holly Whitaker. She is our CMO, our Chief Morale Officer. Holly is well known in our office, and if anybody ever comes down to our offices when we're able to, you will meet Holly, because she is our CEO's young dog. But she's got a number of lending tips for you. So let's start with the first, HMOs. We only require 6 months buy-to-let experience of your client. We will accept unusual property configurations. You could have 2 properties within one house, which you would call a multi-unit. However, one of those properties could be let as an HMO. So you've got an HMO and a multi-unit together. Will we lend? The answer is yes, we will. We'll accept bedsits and student lets. So effectively, it doesn't just have to be professionals renting that property or that HMO. And we do carry out investment valuations on HMOs. But clearly, as Fleet has already said, if there is a lack of HMO experience within the area, you are unlikely to get an investment valuation. Talk to us. Let's have a look at some of Holly's further tips. Expats. Now, this is a big market and is continuing to be a big market. But one thing I would say is don't forget that on the 6th of April, sorry, on the 1st of April, I beg your pardon, that when the new stamp duty changes come in, expats will also be paying an additional 2% stamp duty on top of the 3% buy-to-let surcharge. So this could change this market. But we will lend to expats for individuals and SPV limited companies. We will lend on standard and specialist properties. By specialist, we mean HMOs and multi-units. We have no product loading. So what you see is what you get on our product facility. However, it is for existing landlords only. It is not for first-time landlords or first-time buyers. And we won't accept foreign nationals as applicants or as the ability to purchase under this scheme. Let's have a look at further tips from Holly. Corporate structures. Now, this is one of Christine's favourites, and this encouraged her to sing last time I did this presentation. So in terms of corporate structures and limited company tips, we will accept intercompany loans, much as you've been told already. Complex corporate structures are considered. If you have two companies owning the SPV as your shareholders, and the directors and shareholders of those two companies are the same as the SPV, we can lend to that structure. Effectively, this is something that you will find accountants are very common and very do like putting together, because it's tax efficient, but sometimes is what lenders will turn around and go they do not like. We look for common directors and shareholders across the companies to ensure that we can lend and that it is acceptable. But we do not require shareholders to be on our application. If the shareholder has over 20%, we will complete and require to carry out a credit search on the shareholder, but they are not required on any applications with Keystone. We have no maximum age for the directors at the end of the mortgage term, and our minimum age is 21, much like the others. We will accept trading companies and LLPs, so limited liability partnerships. These are something that are starting to gain traction in the market. We will also do related transactions of personal to limited company. This is imperative and very, very well worth knowing. And in terms of rental calculation, our rental calculation for limited companies is 125 at 5.5 or 125 at 5-year pay rate. And remortgages. Now, these have been talked about already this morning. Will we lend on day one remortgages? Yes, we will. Will we lend on day one remortgages where they've done work and enhanced the value? Yes, we will. And we will lend based against the enhanced value, so long as we lend no more than 100% of the original purchase price and 100% of the work that has been completed on the property, so long as that is no more than 75% of the new enhanced value. We will remortgage for most legal purposes, and like Fleet, we do not look for onward purchases to be completed at the same time as the remortgage. We're not looking for onward property details. We need to understand what the client is using the funds for. And we don't have a debt to income ratio for debt consolidation within remortgages. That is important and gets asked of myself and BDMs on a regular basis, because many lenders do run a debt to ratio consolidation facility. Why have I brought up buy-to-let remortgaging when I've told you that we can lend day one remortgages? First and foremost, because you, the broker, will be, over the next 8 weeks, bombarded by your client to complete a case before the 31st of March. And what I've just seen online, it doesn't look like the Chancellor will be changing the stamp duty date from the 31st of March. Therefore, if the lender you have gone to is unable to complete that case by the 31st of March, what can you do to help your client? What you could do is consider suggesting that they look at taking a bridging facility. They take that bridging facility to complete and therefore pay no stamp duty or pay no enhanced stamp duty for the buy-to-let, but at the same stage then apply to a lender such as Keystone to remortgage that property immediately based against the purchase price that has been completed, but that can complete after the 31st of March. This gives you a way to actually help your client, save them money, and at the same stage buy the property that they wish to purchase to add to their portfolio. Can this make sense? Does it make sense? Yes, it does. But the beauty to it is that it does help your client out of, and you, out of a situation that could become a real problem. Let's look at completion tips, because the 31st of March is now looming. 1, review the lender's service and turnaround times. Absolutely imperative. Check the timeframes for local searches within the area. I've just noted on a comment on the press that Hackney at this present moment are doing no searches, private, personal, or pure individual searches. They are not being done because Hackney was hacked earlier this year, and therefore is unable to complete any local authority searches. Make sure all the documents that are required for the case have been uploaded, and make sure that in terms of those uploads that they are done instantaneously. And potentially when the case is submitted, instruct your valuations at the same time as the full application is submitted. This will give you the opportunity to make as much, to give you as much time as possible to enable the case to complete by the time frame that that is set, which is likely to be the end of March. In terms of current products, all of our products are available on our website, but just to give you an overview, we offer a really simple range of our standard buy-to-let properties products, our specialist and HMO products, which is our multi-unit properties. We also have a current larger loan special facility, which is loans for between £250 and £1 million, and the rates on that start at 3.09%. I'm going to finish off by just giving you an overview that if you aren't already registered with Keystone, please get yourself registered. Clearly, as part of Paradigm, if that put Paradigm down as your club route. But at the stage of getting yourself registered gives you the ability to access our system, gives you the ability to create an illustration and to complete an AIP. All of our system is online. The AIP you complete. Once approved, you then submit the full application form. If you have more than one application to submit, all you do is clone the application and submit 1, 2, 3 or more applications on a consistent basis. The system is easy to use. The system gives you the ability to access it 24/7, 365 days a year. So it is a really good system. And in terms of communication, to finish off, how can we communicate with you and how can you communicate with us? Firstly, by telephone. Secondly, by email. Thirdly, by web chats. By web chats in terms of Teams or Zoom. And fourthly, by our web online chat system. All of those are available consistently, and my BDMs are available to you all the way during the day, and even we answer some of the inquiries we get over the weekend. That gives you an overview that we are there to help you as a lender and for you as brokers to service your clients, which is imperative. Ladies and gentlemen, that's Keystone overall. If you have any questions, I'd be delighted to take them. But I thank you for your time.
Thank you, Phil. That was fabulous as per usual. And someone has put in the chat that you have a fantastic air traffic control voice.
Well, thank you for that.
Your next job, I feel, maybe. Fantastic. But yeah, that's great. Now, I've got a couple of questions. Maximum shareholders.
Yep.
Do you limit the number of shareholders on a limited company application?
No, there is no limit to the number of shareholders. The only limit would be that if they are over 25%, then we would need to credit check those shareholders, but they can have as many shareholders as they so wish. Okay, fantastic.
Do you remember the conversation we had last week about joint bank accounts and single bank accounts?
Yes, I do.
Could we just reiterate that? There are some lenders out there that require exactly the same as you, but there are some lenders that don't. And it sometimes comes up. And I had another one, funny enough, not via you, but with another lender the other day. So it'd be great just to put that out there on your requirements of joint bank account and sole applicant.
Okay, right. So that's a very good point, and it is something that actually I'm talking to marketing about because we're going to put some information onto our website. But basically, whether you have a limited company, well, let's take an individual first. If you have an individual who wants to apply for a mortgage, we will request, well, we will insist that the direct debit comes out of that client's sole bank account and not out of a joint bank account. The reason behind that is that if the second part to that bank account contests or effectively advises us that those payments are not what should have been made, then under the DD mandate and guarantee, we have to then refund those payments to that account.
Okay, yes.
And that's the reason why.
Yes, and I just wanted to make everybody aware of that, because it's not always obvious, and obviously joint accounts, people don't understand some of the rulings that cross over between that direct debit guarantee and a joint account. So thanks for explaining that, Phil. Now, Malcolm's asked a question. I put that up there. Can I repeat this question to Philip?
Yes.
Had new build constructed adjacent to current resi, no mortgage has been let for 5 months. Will you consider capital raise for part debt consolidation as first lender in?
Right. Okay. Firstly, as it's a new build, the answer is we'd need to understand the property to ensure how it's been constructed and what warranty, building regs and planning is in place. But I'm assuming that that's all the case. Would we lend on it? The answer is yes, although we have got a limit in terms of new builds. So long as we have the ability within our new build facility to do that, we would be able to lend. It's been let for 5 months. So effectively, the answer is yes, we could lend on it. If the client is not already a buy-to-let landlord, by the time this is completed, they will be over 6 months, and therefore they will be a buy-to-let landlord and would not be a first-time landlord.
Okay, fantastic. Thank you, Malcolm. I hope that's answered your question. Now, a man after my own heart here. Ian, do you lend on the Isle of Wight or Widget?
Yes, we do.
Yes, you can get. Now, do you do holiday homes, holiday rentals too?
No, we can't do holiday. We're not doing holiday homes. It is something that we're looking to potentially consider, but at the moment the answer is no, we can't do holiday homes.
Okay, fantastic. Thanks, Ian, for that question. I've been dying to ask that for 2 or 3 years. Thank you. Malcolm's asked again, thanks to your answer to the last question.
That's right.
How do you view portfolio stress tests?
Okay, right. So we stress portfolios at 125% at 5.5%. Across the portfolio, not exceeding 80% LTV overall. So, and that covers all buy-to-let properties, be they mortgaged or unmortgaged, but does not cover anything that is commercial, i.e., it could be a commercial property with flats above. That is semi-commercial. That should not be included in the portfolio.
Okay, brilliant. Now, I'm not going to sing because Terry Sains, who's on this session, said he needed a 2-minute warning before I would break into song again. So I'm not going to go, the Boogie Woogie Bugle Boys Company.
Betty B.
Okay, thanks, Phil. Fantastic.
Excellent.
Thank you very much indeed. Thank you very much indeed, Phil. I do apologise to everyone for my colleague there. She was warned about breaking into song, but just can't help herself. So this brings us to the final session of today. Delighted to welcome back Ian Cunningham, Corporate Account Manager for Accord. Good morning, Ian.
Morning, John. How are you? You all right?
I'm very well indeed. Great to, I think this is your first time this year, isn't it?
First time this year, yes.
Yeah, so good to see you again. Good to have Accord here as well. I think over the period of the pandemic, have been one of the lenders that have been on the front foot throughout, and one of the first ones to sort of get back to 90%. And, you know, obviously lend across the range, but naturally today is about buy-to-let. So for the next 20 minutes or so, Ian, I'll leave the room in your capable hands.
Thank you very much, John, and thank you for the time and the chance today to present to you all as well. As John said there, we're obviously quite quick to get into 90% on the residential side, and as a few of the guys that have said before, we've definitely seen the buy-to-let side starting off this year very, very busy as well. As I was pulling this presentation together, it got me sort of thinking about where we've been with Accord and buy-to-let, and I realised that this year will be our 10th anniversary of launching back into the buy-to-let market. And back in those distant days of 2011, I know when we launched in, our criteria was very restrictive. Our underwriting could be very much a case of it has to fit criteria, which was very frustrating both for you guys, the broker, and your clients, and also for our BDMs at the time as well, because you could see some cases that actually we should have been doing that we weren't getting through. Over the last 10 years, I think we've done a lot of work to improve our proposition, look at the way we process cases, underwrite cases, and underwriters are taking a lot more of a common sense approach. So hopefully we feel we've now got a place where a proposition that can support you and your clients going forwards. And today I'd like to sort of look into how that proposition sort of looks, look at the criteria, touch on some of our underwriting, the support we can offer yourselves, and then touch on our growth series at the end as well, and some of the free support we offer there for you. So first off, into our criteria side of things. Whilst we don't sort of lend in HMOs or do limited company buy-to-lets, there's still plenty of areas in that vanilla market that we can help with. But we do tend to put a bit of our sort of raspberry ripple spin on things, and I'll come on to a bit more of that as the presentation goes through. But I thought I'd just highlight criteria-wise some of the areas that we think we're strong in. So first off, LTVs. We can go up to 80% loan-to-value for experienced landlords. If you've got a first-time landlord, we can help them up to 75% LTV. Term-wise, we can do 40 years, up to a maximum age of 85. The only thing we ask is that the client is no older than 75 at the start of the application. We've got a really straightforward and easy-to-use rental calculator. I've put a snip of it on the slide there that's on our website, and a few drop-down boxes, and that allows you then to see what your clients can actually get from us. And our rental calculations are just purely based on the borrower's tax status. So for lower rate taxpayers, we look at 125% at 4.5% for 5-year products, and 125 at 5.5 for our 2 and 3 year deals. Higher rate taxpayers, we look at 145 at 4.5 for our 5-year products, and 145% at 5.5 for our 2 and 3 year deals. And the case gets classed as a higher rate taxpayer if one of the applicants earns more than £45,000 per year. So moving on to minimum income, we do have a minimum income of £25,000 per application. So it could be one person on 25 or a couple on £12,500 each. And that income needs to come from either employed, self-employed, their pension, or from contracting employment, but not from their rental income. However, we do have some flexibility around that minimum income of £25,000, and I'll come on to that a little bit later in the presentation. We do allow capital raising, and for most purposes. So school fees, home improvements, other life events such as marriages, etc. We will allow debt consolidation up to 75% LTV, and there's no loan to income ratios that we use or debt to income ratios that we look at either. And we'll also allow capital raising for deposits on other properties, whether that be a buy-to-let or another residential property, which brings us into where we sit on let to buy. So if someone's looking to remortgage their existing residential onto a buy-to-let and let it out and move into a new residential, and that's important because we do want clients to be owner-occupiers of their own residential property, we can allow them to capital raise up to 80% LTV if they're already an experienced landlord, or 75% if they're a first-time landlord, take the money out and use that on the deposit on their new residential property. For portfolio buy-to-let landlords, so they've got 4 or more properties, we've got a really straightforward and easy process. The application form catches all the information we need, such as the rental, the mortgage amount, and the mortgage balance outstanding. And we'll then cross-reference that with the credit file to check the monthly mortgage payments. And then the data you give us about the rentals, we'll take that as read. For that background portfolio, all we ask is that the rentals cover 135 at 5%, and we don't assess it on an individual property basis. We do it across the whole portfolio, whether they're mortgaged or not. and there's no LTV restrictions on that either. So if you've got a client who maybe has 1 or 2 properties in their portfolio that far exceed the 135%, that can offset any that aren't perhaps meeting that criteria. So we do look at it in the round. Just wanted to highlight, we do have a separate Accord buy-to-let website. There's 2 little tabs when you go into Accord, Resi and buy-to-let at the top. And I wanted to highlight that just purely because that's where we hold all our buy-to-let information. So such as criteria, with an easy tool for you to search the criteria on there and just put in keywords. That's where the rental calculator sits. But it's also where we have our turnaround times that are specific to our buy-to-let underwriters. So it doesn't go into the mix with all our residential cases that we're processing as well. And as we go to the offer turnaround times, I mean, that snip was taken a couple of days ago, but on buy-to-let now we're sitting at 12 days. And our offers are valid for up to 6 months for both purchase and remortgage as well. So moving on to what we do with our underwriting, and this is the area where we do add that sort of bit of the rapid ripple to our vanilla ice cream. And on the slide, I just pulled out some of the things that our underwriters think about when they're looking at cases. But the key thing is that statement at the top, underwriting with common sense. Our underwriters have had the ability to apply common sense to our policy for several years now, and it's worked really, really well. And it's brilliant because it means they don't have to apply carte blanche approach to cases that come in. They can sit, they can listen, they can consider what the positives are in the case. And yes, in the current circumstances, we may ask a few more questions on certain types of clients depending on their circumstances, but that could help us understand that case a lot better and hopefully give you a yes as opposed to just saying no straight from the outset. And I think underwriting has changed a bit in the last 10 months especially. So I thought we used to go over what our underwriters are thinking and looking at. And I'll come on to that in a second. But I think the key thing is that if you get that alarm bell ringing in your head and you're thinking, oh, I'm not quite sure about this, please get in touch with your BDM. They work really closely with our underwriters. They can take the case and the details to them and have that conversation before you do a decision in principle. And whilst our credit scoring system doesn't leave a footprint on the client's credit file at dip stage, to save you some time, it's probably worth discussing this case where you think, oh, I'm not too sure. So looking specifically at buy-to-let, where we are that bit of raspberry ripple, I mentioned earlier on about having that flexibility around the minimum income. And yes, we're happy to look underneath that £25,000 limit. If they're an experienced landlord who's perhaps got low residential mortgage or no residential mortgage, so their outgoings are low, if they've got properties that have been let out for a number of years consistently and over and above achieving what the rental stress rate needs to be for that property, again, that's a massive positive for it. Or perhaps they've got a partner that they live with who earns substantially more than them, but isn't on the buy-to-let for a particular reason. But we know and we can understand that, we can see that actually the household outgoings will be met by that other person that lives with them. Other areas we can look at are landlords that are not owner-occupiers. I know I did say earlier on that we do want them to be an owner-occupier, but if we can understand their residential situation, i.e. perhaps they may be in the army and living in accommodation that way, or private school, or I did a vicar when I was a BDM many years ago who obviously lived in the vicarage. As long as we can understand what their residential situation is and that we can see then the buy-to-let isn't going to be a backdoor residential, we can get comfortable with that. And we can also look at very different property types. I've heard quite a lot this morning about how deck access and ex-local authority properties, again, we can look at those outside the criteria. What we're looking at, like some of the other guys have already said this morning, are those good quality properties that we can see that they're being rented out or in an area where there is that demand. And again, if you give our BDMs the full address, they can position that with our underwriter to have a look at and see if it is one for us or not. I think the last bit on the underwriting I wanted to pick up on is the self-employed, because they've probably been most affected over the last 10 months of the pandemic, and as it always takes them a bit longer perhaps to get back to where they were with trading. And whilst buy-to-lets, we don't use affordability to work out how much we'll lend, we still have that issue, have that element of responsible lending. So we need to know the income is going to be sustainable going forward and to meet those residential commitments they might have or personal debt commitments they might have. So just on the self-employed, it's always worth just looking at it and considering what the effects of lockdown may have had. Has the business continued to thrive? Is it trading just as well as it was before lockdown? What's happening now? Perhaps they're taking some government grants, but they can see on the bank statements that income's coming in and the business is getting back to where it was before. Or maybe the business has actually invested and looking to trade a bit differently to keep in touch with its clients? Have they created an online portal, maybe an online offering for their clients so they can keep in touch? All things that are worth having to consider when you're looking at your client's circumstances. Our underwriters really do appreciate, not all clients are the same, and they'll get a second opinion from colleagues in their underwriting teams. They'll even come back to you guys to ask further questions, anything that you can give them to help support the case if they're not sure about it. But like I say at the start, if you get that alarm bell, take the time to pick up the phone to the BDM or drop them an email with the case details on there, and they can hopefully get you that quick yes or quick no early doors for you before you even type the case into us. So the next bit I wanted to look at is perhaps to help how we can help each other. We're all really busy at the moment. You guys were helping your clients either get cases through to completion before the stamp duty deadline, or ourselves as lenders, we're having various capacity issues either due to the weather that we've had up in the north where we have some of our head offices, or just down to some COVID restrictions that we have in place in offices as well. And I thought I could look at some areas where we can help each other out, and some things for you guys to perhaps consider that you can do to help us. So first one is our accountant's references are available in our packaging guide, and you can print those off, and we're happy for you to send those out to the accountant and get them back and upload them with any other supporting documents when the case comes in. And that's great. That'll save us having to do it, us having to chase up the accountant and wait for it to come back to us, saving several days on the offer turnaround time. But it's perhaps also worth considering whether you get it before you've done the decision in principle. That way you can see what the figures look like. If that alarm bell starts to ring, you've got the figures in front of you, you can send that on to your BDM and they can have that conversation with the underwriter based on the figures we know we're going to get in with the case. Uploading documents in one go. So if you are waiting for something to come from the client and you've already got a part of the documents, save it up, put it on the system in one go. That way, when the underwriter gets to it and the system tells it the documents are there, they can look at all the documents together, fully understand the case, and on the rare occasion we perhaps do have any queries on those documents, we can come back to you in one go, not in dribs and drabs, as and when documents get uploaded. And if you do get documents after submission from the clients and it perhaps throws that curveball at you and tells you something you weren't expecting, highlight it to us, let us know about it, don't let the underwriters find it, and then we can have that conversation with you about actually understanding what that means for the case and going forwards. And then last but not least, as I've mentioned several times already, if in doubt, ask. We're more than happy to have those conversations with you about the case. And then just to finish off on what I mentioned there already about the packaging guide, it's online, it's on the Buy to Let site. Have a look at it. Some of the documentation, it may not be as much as you think we need. For example, if we can verify your clients electronically for ID and verification, ID and address at decision in principle stage, we're not going to ask for anything to support that. We might not ask for bank statements on some cases, but if we do, we're happy to take online versions of those bank statements as long as they show the client's name, account number, and sort code. And for any documents you do have to upload to save you a bit of time, they don't have to be certified or signed by yourself. You can just tick a box to say you've seen the originals when you're uploading the documents. All things hopefully just save you that little bit of time. So what support can we offer you as well? Our BDMs, they're still there, they're still available for all those new inquiries, all the help with cases that you might need that have the alarm bells ringing, as I've mentioned already. But like with all lenders, the BDMs are busy at the moment. And what they've tried to do, just to sort of signpost that to you, is put an out of office on there. So if you do get an out of office, it doesn't mean they're not around and they're on holiday. Have a read of it. It probably tells you that actually they're not replying as quickly as perhaps you're used to from our BDMs. And there also might be some little hints and tips of where else you can find information that might answer your query rather than you waiting to get back to them. But they are working really hard and they're working hard to keep on top of it all. So you will get an answer back from them as quickly as they can. We've got a web chat facility that's been up and running for a while now. It's been our main portal to get access to us for quick, easy answers from our business development advisor team. And it's been the case since lockdown happened. Last year, the guys managed to speak to 115,000 chats with an average broker satisfaction score of 9.5 out of 10. And in January alone, they've already answered 12,000 chats. So it's a quick and easy way to get an answer from us. If it does go into a queue, the system will ping you and let you know when it's your turn, so you can get on and do something else as well. I've highlighted the website. you know, like I say, there's our criteria guides on there, there's rental calcs on there, but there's also some more complex stuff on there as well, such as if you want to do a buy-to-let product transfer, and it can talk you through how to do that. So it could be a good point of call to check if you can get the information you need. Application progress is all done in real time on the portal. So as soon as an underwriter's looked at something or uploaded a query, it'll all be on there. And then last but not least, valuations. We aim to instruct those within 48 hours, so you don't need to chase those. And as I mentioned earlier, you know, we can have a look at properties up front for you as well. So if you've got that query, get in touch with our BDMs. So moving on to our growth series. It's a free resource that we've had out in the market now for coming up to 3 years. And if you've not perhaps come across it or know exactly what it is yet, it's aimed at helping you grow your business. It's a collection of podcasts, blogs, and how-to guides, with help from industry experts talking about a wide range of topics, from recruitment to how to maximize, how to get found on a search engine, looking at your website and what perhaps things you need to have in there, talking about client retention strategies and how to keep in touch with your clients. So it really is a broad church of information. And what I've tried to pull together on the next slide is some of the bits and pieces that we've done on buy-to-let specific content. There's 3 great podcasts on there from people within the buy-to-let industry, looking at the market in 2020, and also more recently with Jenny at Mortgages for Business, looking at buy-to-let post-pandemic. There's a couple of blogs on there about how to attract landlords as clients, or what do landlords expect from you as a broker. So again, looking at it from the other side of the fence and maybe putting you in their shoes, so you can see what things you can perhaps look to do and to support your buy-to-let clients. And then last but not least, the guide, which is our buy-to-let tax guide. This guide has been our most downloaded piece of content on the Growth series. And it was put together with the help of tax experts. And you can actually download that as a Word version, put your own logos on there as well, so it can be totally branded with your own firm's branding. So it makes it look like something that adds to your business, and you can share that with your clients as well. So I've had a look at a bit of the criteria that we can do, and in some areas, hopefully, a little bit differently. We've had a look at our underwriting and our underwriters' willingness to apply that bit of common sense, add that bit of Raspberry Ripple into what we do as a buy-to-let lender, and look at the support, not just within what our BDMs and the service side of things, but also the growth series side, and hopefully where we can add that value to our relationship with brokers. I put on this slide, what next? So hopefully in the first half of this year, we're looking to move our buy-to-let applications onto our MSO platform. If you don't know what MSO is, it's an application platform that we've been using now on our residential side since autumn of 2019. And it massively helps our underwriters do a lot of heavy lifting. So actually they can get cases through to offer quicker. Some of them don't even touch the sides, but also at the same time, it gives them more time back. So we can spend more time looking at those cases that are perhaps a little bit outside of criteria. And if they can spend more time on them, we can do more of those cases and not be worrying about the other cases we've got in the background. What that will also allow us to do is look at other areas of the buy-to-let market to add to our proposition. And unfortunately, I'm not in a position today to show you what those are, but there are some key areas that we are looking to get into. And watch out for that as we prepare the communication out to launch into that in the first half of this year. So that's it from my point of view. Thank you very much for listening. And I'll pass back to Christine for any questions.
Ian, fantastic. Thank you for that on the call. We haven't heard from you for a little while on our events, and it's great to have you back on talking about particularly about the growth series. I know I've made a couple of contributions to the growth series in the past, and it's fantastic. It really is a great way of learning about things, particularly the buy-to-let, how to attract landlords. That's a really good guide. So guys, if you are looking to get in or more attraction to your proposition landlords, then please have a look at that. Fantastic. Now, I'd like to ask about, and this might be going off piece slightly, but about the Brexit issues with maybe EEA nationals. Have you come out with any of your guidance on that as yet for settled or pre-settled status?
We haven't come out with it officially yet. We're working on it at the moment. I don't think there'll be any surprises in there. So it'll probably follow what other lenders have come out with already. So if they've been here more than 5 years, and they obviously they qualify for that pre-settled status, then that's fine. But at this moment in time, no, we haven't officially done it, but it should be out imminently, Christine.
Okay, thanks for that. Now, Mark Jackson, good morning. Well, it's good afternoon. It's good afternoon. Oh my gosh. Mark Jackson is asking about top slicing. What's your view?
Yeah, thank you for the question, Mark. And it caught my eye as I was going through the presentation and then caused me to stumble. I guess I'm going to refer to that last comment I made about when we move on to our MSO platform and watch this space. It's something we do want to get into. So hopefully there should be some good news coming in the first half of this year.
Great. And it'd be great when you move on to MSO, Ian, because that will make things a lot more consistent, won't it, in that approach. That's fantastic. Now, they're very quiet on questions. Now, that's not necessarily a bad thing, because I think everybody realises how hard Cord and the BDMs have worked. I have to say many congratulations to you and the team there for the support that you have shown brokers throughout this pandemic. It has been really great, and I just want to say that to you and to thank the team and the BDMs. They've been terrific.
No, thank you, Christine. And I think it works both ways. I've touched on some of the things in there about help us to help you in the packaging, and we have seen a massive amount of effort made by brokers to get the right documents to us, to get it to us, in one go, etc., so we can get the cases through to off as quick as possible. And they are picking up the phone and speaking to us about a case up front just to make sure it fits. And we're there to support, and happy to do that. So, but thank you very much.
Thanks a lot.
Ian, really good session. Good to see you again. And again, thanks to Accord for all they've done throughout this pandemic. So it brings us to our final session of the day, and it's going to be Christine taking you through fraud, how to do it successfully, what scams she's come up with, and where the cracks in the system are. Something like that, Christine, I believe.
No, John, no. This is a serious question.
All right.
And serious session.
Well, as you and I have both been on the receiving end of hacked data in the past, we do actually understand that it is a serious issue. So yes, we were on the receiving end of the British Airways. If everybody remembers my session a little while ago, I made a bit of a faux pas in that. But you can now, John, if you don't realise it, actually put in a claim now against British Airways. Not that I'm I have seen that, actually. There is a class action suit.
There is a class action.
So,
yes.
Yeah, anyway, we'll discuss this another time.
Yes, discuss it slightly later. Okay,
yes.
So
over to you.
Guys, I'm going to be talking to you very, very quickly. Normally, it would be 45 minutes of me running around, giving you lots of information about fraud and giving you some hints and tips. I am going to give you some hints and tips, but I'm not going to spend that long because obviously it is 12:15 and we want to be finished by 12:30. So now, what are we going to be looking at? So, although we're going to be looking at types of fraud, what you can do to help try and prevent it, and some next steps, and then we'll have a look at some questions. So, although intermediary fraud prevention has remained stable, the changing times have provided some challenges. Recent data show a slight increase in intermediary fraud. Income and employment fraud still remains the highest area of concerns, with 87% of all fraud related to income and employment. It's not surprising, as according to Lloyds Banking Group, the average house prices have increased to 245,000 outside of London and 499,000 in London. Now, first-time buyer prices have increased by 69% over the last 10 years, and our average income has only increased by 20%. The pandemic has also given opportunists a greater chance of succeeding in carrying out financial crime, as we're all more working from home with less protections, and not the ability to discuss these things with other colleagues when we have a concern. So the main types of fraud are on your screen now, and at the moment, but talking of opportunists, let me introduce you to the fraud triangle. So how does fraud begin? It always starts with an opportunity. It may be that the client wants to get on the property ladder, particularly where clients might have saved enough deposit due to COVID restrictions or have come into some money from Bank of Mum and Dad. Pressure from outside influences can bubble away, such as conditions where they're currently living, maybe they're renting, maybe they're in inner cities. This in turn leads to the client believing that they have a justifiable reason or rationale for committing fraud, i.e. falsifying their documents, maybe asking a family member to provide them with a source of income, or falsifying bank statements. Self-employed, we know, have been almost the downsides of the pandemic in terms of the lender. If they've taken SEIS or bounce back loans, they can't consider that income, and so they might consider moving to an employed status just for the purpose of getting through the mortgage. So there are other types of fraud as well. Things like professional fraud, solicitors who are under pressure financially, or workloads. Currently, there's a mass going in there for the stamp duty deadline to conveyances, and they may put themselves at risk. And a lot of that comes from data security and data breaches, where customers' details are sort of changed or emails intercepted, and fraud occurred, such as property hijack. First-time fraudsters, we're seeing a lot more of those now, in terms of they've never considered it before, but can justify it in their heads because they can afford to pay the rent. So why can't they afford to have a property or buy a property? And then last but by no means least, there's the organised fraudsters, and there's much more opportunity out there, as I've mentioned before, from working from home. But we all know what the consequences are of being removed from a lender's panel, particularly if it's a mainstream lender such as Lloyds Banking Group, because Lloyds Banking Group have 3 brands, BM, Scottish Widows, and Halifax. And losing those lenders or access to those lenders can cause you real big issues. Not being able to call yourself independent is one of those, because you can't use that lender, or being removed from a number of lenders will also higher your profile at the Financial Conduct Authority, but not obviously in a good way. And it's been known that the Financial Conduct Authority will ask and can ask you to surrender your mortgage permissions if you are removed from lots of lenders. And eventually, obviously, that's going to come to loss of income, and eventually you will be lose your business. Now, lenders don't actually remove you straight away. They may monitor you for a little while, monitor the business that you're sending in. I mean, they have to absolutely know 100% that you are, or a broker is, or a firm is complicit with that fraud. So they probably would look at your business for a short period of time and make an informed decision following that. You'll probably not know that that is actually happening either. So it's all about being vigilant and following your financial crime procedures. If you see a really high salary but corresponding benefits are not apparent, then you probably need to ask why, as this will be unusual in an employed situation. And I've got a pay slip to show you in a moment that came in recently from Lloyds Banking Group. I have made some changes on it, so it is anonymised. But one common thing that is materialising on fake income payslips is that the employer's first initials are being used as the employer number, and I'll show you that in a moment. Self-employed minimum salary and high dividends, but company accounts don't support that level of dividends. Always check out Companies House or limited company, or Google the limited company and have a look at Street Map to see where it's trading from or where the firm is based. Now, we talked about opportunities in the fraud triangle. Now, here's a classic one of those when the EWS form and the cladding came in following the Grenfell Tower tragedy. Now, we know that these are onerous conditions and we know how hard it is to get an EWS1 form. But obviously Cardiff, this fraud, EWS form, fraud happened in Cardiff, and they went one stage further. The fraud started actually in Century Wharf estate near Cardiff Bay, and the next policeman who lived on the estate was suspicious of the EWS form that he'd been given being issued to, and was being issued to several leaseholders on that estate. Now, it was to prove that the cladding was not a fire safety hazard. And the form was fraudulently signed by a qualified surveyor. And when she was approached, she was horrified to find that she was being used as part of that scam. Now, the property management company was also the victim of fraud too. So RICS has most recently conducted a consultation on the cladding debacle that's left homeowners trapped. It's designed to improve consistency in those EWS1 forms and obviously stamp out types of fraud like this. Now, changing the subject slightly, we've had a couple of lenders reporting where they've taken calls from first-time buyers directly. Those first-time buyers during the conversation and using terminology that probably they wouldn't necessarily be familiar with, such as saying, oh, what's the ERC on that product? Or do I need an EWS1 form? They might not ordinarily know that type of language, and that's something to also look out for. One last thing to mention before I move on is ghost brokers. So what are ghost brokers? Well, it's been reported to a couple of our top lenders that they have received applications via their direct online portal. These have been submitted by off-panel or banned brokers who are charging the client a fee as if they are a normal broker. Some of the clients are complicit with the broker, they know what's going on, but in a lot of cases, some have no idea and they've been duped. The so-called ghost broker also inflates or deflates income, making it fit affordability. And if it's spotted and declined, the broker tries other lenders, causing the client to have CFAS records afforded to them and eventually unable to continue with any mortgage finance at all. And last year, I came across my very first one of these, and the poor clients had no idea it was going on at all. So always ask the client if they have applied for a mortgage elsewhere or with another broker or online directly. Have that question embedded in your fact find. So let's have a look at that pay slip. Here we go. I hope you can see that. You can see there the employer number starting with the company initials. Now, some of these have been known to be particularly fraudulent, so keep an eye on that. You can see that this client is paid a lot of money, £15,000 a month, but no variable pay despite the income. No pension, no healthcare on that pay slip. So you can have a look at that. And then further down, year-to-date tax and NI, it's all the same for all those periods. Now, you can go online, you can find tax calculators that will provide the right information to get the correct tax on a pay slip. So fraudsters can avoid this type of thing. But I would suggest to you, always get bank statements to back up your income. It doesn't matter that the lender doesn't need them and doesn't want them, but you should always consider getting 3 months bank statements to back up those pay. Or alternatively, if you've got concerns, why not go for 4 months, 6 months? Or say, can I have January's pay slip plus the last 3 months, wherever you are in the year, to spread that out? If you are in doubt, Always ask for more information. Quite often the client will not return if you ask for too much. And if the client does not return, you should actually make a suspicious activities report. Although a lot of these have no further action taken, and you may think they're a waste of time, but you can bet your bottom dollar that the one you don't report ends up into being something that is linked to a much larger fraud ring. And you need to follow your financial crime procedures. The counter to this is, of course, you are not the police and you don't need to do their job for them, but you could inform a lender of your concerns or a BDM if you're put in the position to having to submit an application and you can't quite put your finger on it. You know something's wrong, but you can't quite put your finger on it. They have other systems like Hunter and Sirius, which allow them to cross-reference to other applications that might have gone in to see what's happening with that particular client. I know one of my clients recently, one of my brokers phoned me up to say one of their clients had complained that the broker was kind of victimizing them, asking them for all this information and threatened them with the GDPR and said, I want you to remove all my information and withdraw it. And he phoned to ask me some advice on that. And obviously you have the right to ask for as much information as you require. Don't forget, lenders will ask you. So make sure you're okay with that case before you submit it. And under your Data Protection Acts, you are allowed to keep information longer and store it and not delete it, providing that you've identified that with your client in your data protection statements. Okay, so there have been a number of rogue protection, other scams. Let's have a quick look at those. So there have been a number of rogue protection lead generators, should I say. And we talked about this on the protection website last week. These have been made to firms. So firms have been rung up saying, oh, look, we're a lead generator for protection. We can take all your client bank, pay you all this money for that, write to your client, sell protection, and you could get this commission. And quite often in these circumstances, what happens is the protection is sold, then the policies are cancelled, and the firm is left with a large debt. If it sounds too good to be true, it generally is. So stay away from those. Be very careful when you're approached. I don't know whether you've heard of WeReBank. This man is, in my opinion, quite mad. He's known as Peter of England, and he has a political party called the WeRe Political Party, and he basically is using old laws, old credit laws, check laws, to try and corrupt the existing financial services system, the payment clearing systems and things like that. He feels that the banking system is totally corrupt and fraud anyway, and his fight is against that. But he has a lot of conspiracy theories and fringe theories. But he generates these promising notes and sucks clients in to say, look, you can give this to the bank and it should pay off all your debts, which is a load of rubbish. But there have been some of those since lockdown. I know it sounds strange, but it has happened. Be careful of those. They're promissory notes from WeReBank. And actually, the sort code is his date of birth back to front. Totally loopy, but anyway, there you go. He's on there. Amazon Prime renewals, lots of those happening at the moment. Lots of fraud going on with those. So be careful when you get your Amazon Prime renewal form through. National Crime Association. We've had another load of people pretending to be National Crime Association reps. We've had a couple of lenders being phoned up and being told particularly that their national insurance numbers and their bank accounts have been had suspicious activity on them. Please press 1 to proceed further with that. And of course, when you go further, you go through to a National Crime Agency bogus rep who tries to then get that personal information out of you. So be very careful of that. Paradigm is constantly trying to bat phishing, vishing, and smishing. And this basically is quite often used to get and obtain personal information. Could lead to compromise of your income savings and large sums of cash, such as deposits, and particularly on that house move, we've seen deposits go missing where they've intercepted emails and then fraudulently set themselves up as a solicitor to get those deposit funds. Luckily, particularly Lloyds Banking Group now use payment screening on solicitor panel bank account records to help identify discrepancies. The lender exchange is a checker tool for solicitors' bank details as well. So remember the 3 C's on those types of things. Call the solicitor, check the bank account details, and confirm genuine before making a payment. Use the 3 C's. That's on the Take 5 fraud campaign. My last little piece on that is 2-factor identification, or authentication, should I say. It is crazy. I hate it. I have to go in, I get a code to my phone, I then have to put the code in. Oh my God. But it is by far the best thing for protecting you, your families, everything else against a fraudster. If I could tell you anything to do, it would be to there's a camera, factor identification. So use that. Okay, that's me done. Off my soapbox. Stay safe out there, guys. And any questions? None. Good.
Really good. Christine, as usual. And it's one of those things, particularly during lockdown, unfortunately the fraudsters have been out in force, trying to trip people up, charging for vaccines, and obviously we've just passed the tax year payment deadline as well, so loads been going around on that. So it really is about just trying to stay on top of everything. Just a quick word on stamp duty before we go, because I know it's close to everyone's heart. If, like me, you're a bit sad, you tuned into the virtual debate yesterday that was started at 4:30 on the parliamentary TV channel. I'm sure you've all got that logged as one of your favourites. You'll realise that was an hour of your life you'll never get back again. It was a talking shop, and we shouldn't be surprised because it's politicians basically saying the bleeding obvious and taking statistics and using them totally out of context. And actually, they've got no power to change what may or may not happen. What may happen is there could be an extension to the stamp duty holiday, but it's not going to be announced until fairly late on. In fact, the earliest it potentially could be would be March the 3rd, because that's the next time the Treasury is making any significant announcements. They might leave it until about 2 weeks beforehand. And it's mooted that any extension will be for those that have exchanged by the 31st of March, but have a completion date before the end of April. And that way it would show some understanding for the problems faced for those in the process, mainly down to the pandemic, but prevent people sort of gaming the systems, particularly some of the new build sites who would exchange everything in a week and complete sometime in September or October. And that's not really what it was designed for. There's also, and I realise this kind of goes against the grain of what we've been talking about today on Buy-to-Let, but there is some talk that they might extend it for residential purposes only. We shall see on that one, but that's sort of the latest on that. So thank you to everyone for all your time today. Thanks to our lending partners, to Accord, Fleet, Keystone and Cepha. Some great sessions. Thank you, Christine, as well. Really good session. We're back again next week with complex and specialist lending workshop with...
You know what workshop we're doing next week, John?
Makes a change, doesn't it? Mind you, I've got it written down in front of me, Christine, because, memory of a goldfish. So we've got Gatehouse Bank, Hinckley and Rugby, Key Group and Kensington. So really good, hopefully, and varied programme for you. Thanks again to Laura in the background for making it all happen as well. I think today ran seamlessly. Anything else, Christine, that we need to add before we discuss?
No, just loads of stuff in the chat, guys, that you're sharing, which is really good. Some of you using Credas, which is good. Kevin Davis using two-factor authentication. Yes, get in there. Oh, isn't it terrible when you forget the other mobile phone that your two-factor authentication is actually linked to? A nightmare. But anyway, yes. Oh, look, and Scott put in there. How funny. I literally just got a call telling me my national insurance has been compromised. There you go. There you go. That's the National Crime Agency, not.
Mm-hmm. Yeah, so thanks, everyone. Thanks, Christine. Stay safe, and hopefully we'll see you all next week.
Yes, thanks, everyone.
Bye-bye.
Bye.